At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, November 8, 2023, Rivian hikes production target for 2023. Rivian trucks are selling better than expected in a troubled EV market. Rivian raised its 2023 production targets by 2,000 vehicles. The loss of $1.37 billion was smaller than expected. Rivian ended the quarter with $13.8 billion in cash. Rivian Automotive, Nasdaq RIVN, stock rose nearly 7% overnight after posting better than expected revenue and earnings. It also increased its 2023 production target by 2,000 vehicles. The electric vehicle maker lost $1.37 billion, $1.44 per share, on revenue of $1.34 billion during the quarter. There was an operating cash flow loss of $3.6 billion, but it ended the quarter with $13.8 billion in cash. Rivian stock opened today at $18.50, a market capitalization of over $19 billion on an estimated 2023 revenue of $3 billion. As of early morning trading, Rivian stock has pared down its overnight gains somewhat and is sitting at about 1% in the green. Why Rivian rose? Rivian is best known for its R1T truck, which continues to sell well despite being priced at over $70,000. It has financial stability thanks to early backing from Amazon, which placed an order for 100,000 electric vans back in 2019. Those vans are starting to roll out. But Rivian said it will now sell them to other companies as well, ending the exclusivity arrangement. Amazon still owns a 17% stake in Rivian. The production hike buoyed analysts, an indication demand for Rivian products remains strong even while the EV market itself is troubled. Rivian made 15,564 vehicles during the third quarter, up 23% from the prior quarter. Rivian is currently producing its products in Normal, Illinois. But it's building a large factory outside Social Circle, Georgia, with $1.5 billion in state subsidies. The factory, along I-20, will be supplied by a battery plant to the north along I-85, east of Atlanta. The numbers caused analysts to breathe a sigh of relief. There are 21 analysts following Rivian at tip ranks, and 14 have it on their buy lists. Since its last earnings report 3 months ago, Rivian stock has gone down 28%. For all of 2023, it's only down slightly, assuming it keeps its overnight gains during the trading day. What happens next? Rivian has the momentum among America's EV startups. It just needs to get costs down by the time the Georgia factory opens in 2026. Analysts are optimistic on Rivian. Rivian raised its full-year production guidance, but pressures remain. Rivian Automotive stock is on the move after the release of its third-quarter earnings report. Analysts are generally optimistic about the electric vehicle maker considering the solid quarterly print. Still, Rivian stock faces major pressures amid a downcast environment. Given the dark clouds hanging over the electric vehicle sector, the better-than-expected third-quarter earnings report by Rivian Automotive is providing a much-needed respite. Subsequently, several Wall Street analysts have reiterated optimistic ratings on Rivian stock. Still, not all experts are bullish on Rivian, as the underlying industry faces some significant pressure. Late yesterday, Rivian posted an adjusted loss per share of $1.19 per barons. While a negative bottom line isn't ideal, the street had anticipated the EV upstart to incur a per share loss of $1.31. For context, the company previously reported a loss of $1.08 in second quarter of 2023. For revenue, Rivian also posted third quarter sales of $1.3 billion, matching analyst expectations. Even better, management raised its production guidance for the full year to 54,000 vehicles from about 52,000 units. In contrast, sector leader Tesla missed on both earnings and revenue estimates for third quarter. Additionally, the usually self-assured CEO Elon Musk tempered expectations for the upcoming Cybertruck and lamented tough economic conditions. With the suddenly pessimistic Tesla as the benchmark, then, many analysts are seeing opportunity in Rivian stock. According to CNBC, major firms, From Goldman Sachs to Morgan Stanley, view the EV maker as a strong play, especially as competitors like luxury EV maker Lucid struggle to hit production goals. Rivian stock draws intrigue, but also skepticism. In particular, Goldman Sachs analyst Mark Delaney raised his price target on Rivian stock to $25, implying a robust 43.5% return from yesterday's close. We believe that the quarter was a modest incremental positive with respect to longer-term volumes, and the company is executing on its cost targets, said the analyst. Interestingly, though, Delaney maintained a neutral rating on Rivian stock. Meanwhile, Evercore ISI analyst Chris McNally issued a more optimistic assessment on shares, maintaining a $35 price target, a doubling from Tuesday's close. According to CNBC, McNally expects gross margin to break even by the end of 2024. Morgan Stanley analysts also believe that Rivian carries sufficient liquidity to last through late 2025. Despite this broader optimism, not every analyst is enthusiastic about Rivian. For example, while Wells Fargo analyst Colin Langan raised his price target by $5 to $24 per share, he noted a murky line of sight ahead for Rivian stock. The company has a low margin for error in all aspects of its business. Rivian must prove it can acquire the customer base, while maintaining low advertising costs, said the analyst. A low margin for error is exactly right. With EV demand plunging and dealership inventories rising, the sector fallout has stressed the broader value chain. Plus, the cheapest Rivian model costs $73,000, a tough ask in a high interest rate environment amid mounting layoff fears. Why it matters? At the moment, analysts rate Rivian stock as a consensus moderate buy on tip ranks, although pensiveness is creeping in. Specifically, the assessment breaks down as 14 buys against 6 holds and 1 sell. Overall, the average price target for shares lands at $26.60, implying about 58% upside potential. Thanks for watching.